Hello and welcome to Sri Lanka's CA Connect podcast. I'm your host today, Oshadha Gunasekara. In this episode of Point of View, we will discuss the outlook for Sri Lanka's macroeconomy and Sri Lanka's capital markets in 2025. As we move forward from an year of stabilization in 2024 towards sustainable growth amid economic reforms through the external debt restructuring as well, we look to explore how this will affect Sri Lanka's economy in 2025 and beyond. So to discuss these topics, we have with us today two distinguished guests, Mr. Dhananath Fernando, CEO of Advocata Institute, and Ms. Bimanee Meepagala, CEO of CLSA Asset Management. So without further ado, let's start off the conversation. If I can start off with the first question to both Dhananath and Bimanee, maybe Dhananath, you can go first. The external debt restructuring, we are hearing it's likely to be completed by the end of 2024, and we are likely to get rating upgrades also soon after. So what would this ideally mean to Sri Lanka's economy going forward?
This will mean that we will have, if we get the rating upgrade and with the completion of the debt restructuring, we will have better credit access by the markets, mainly with the bilateral creditors and also with the multilateral creditors. Because when we are at a default stage and when our debt restructuring are moving forward, the investment and the business environment is somewhat uncertain. So when we are coming out from the complete debt restructuring, ideally we will get in few months' time also a credit rating upgrade. So with that upgrade, we will have access for better sources, better funds, and better markets, and importantly at low interest rates. Because now when you are at a default rating, the interest rates that the market is offering us is quite high. So on that front, it is good news for Sri Lankans that the business environment and access for credit is becoming better. That's number one. Number two is also it is important for people because then the government will have better access for funds, means especially on economic growth front, because the next step is, I think, economy is somewhat stabilized. The next step is for moving it to growth, and to grow the economy, we know we all need funds, or like we need money to invest to improve growth. So if the interest rates are coming down, mainly if the government can borrow also, I mean, of course they have to borrow continuously to service the debt, but even with the multilaterals and the bilaterals, and to an extent when we are borrowing from the markets, it will help the government to do the necessary infrastructure development as well, which is key part of our development and on growth. And finally, very quickly, for people with this stability and with clearing out that uncertainty, they should be able to also afford better, or like experience better interest rates, lower interest rates, which will also help them to have better access for credit markets and do the business expansion, so on and so forth. So that's how I see with the debt restructuring coming to an end, and also with hopefully some credit rating upgrades afterwards.
Thanks, Dhananath. Bimanee, any thoughts you would
Yeah,
like to add?
so essentially, what is essentially the debt restructuring getting completed and a subsequent rating revision? What it suggests us is that basically the markets will sort of endorse the Sri Lanka's reform agenda carried out thus far in terms of increasing taxes and some of the pricing formulas that we carried out. So it's essentially an endorsement of the reforms that we have carried so far. So since Dhananath essentially touched most part of the macro side, the benefits that are coming, I will touch on how the markets would react. So as you know, Sri Lanka is in the default category, and because of this default nature, international investors, essentially most international investors, will not be able to look at Sri Lanka because they are going into a default country. So of course, the rating upgrade helps us basically to attract more money into both fixed income and equity markets. So that is broadly quite a positive outcome from where we are today.
Thanks, Bimanee. So, on the treasury yields, I think the foreign investments have been kind of improving in the government treasury market. Any thoughts there? And what would you say is your forecast for the interest rates in 2025?
Okay. So broadly, Oshadha, there I'll just throw some statistics. So if you could remember, just before the domestic debt restructuring, overall foreign investment in treasury bills and treasury bonds were at about 159 billion, which is about 1% of the outstanding treasury bills and bonds that were issued. So right now, that amount is at about 58 billion. So broadly, foreigners looking at Sri Lanka, yes, definitely the rating upgrade is going to be a positive, because obviously it becomes an investment option or investment destination for most foreign investors when the rating upgrade happens. But of course, what is important to identify is that in order to attract foreign investors, it's important to understand their interest rate outlook and the currency outlook as well, because obviously their money is going to come to Sri Lanka. So again, look at the current context. The treasury yields, the treasury bill yields are slightly below 10%, and the long end also has eased off quite a bit. And on the currency side, our currency has appreciated about 11%, right? So if you look at it on a standalone dollar point of view, dollar is also quite strong as we speak, and the 10-year note is at about 4.2. So it's relative outlook and outlook on the forex and the interest rates that we have to really look at. So given where the dollar strength is and our rates easing and the overall context where we are in, yes, we feel that there is going to be quite a bit of positivity that is going to be there, because foreigners only hold less than actually 1% of treasury bills and bonds. So whatever we are going to attract is going to be a positive. But the good news for Sri Lanka is, even if in case given the currency outlook and the rate outlook, it's not going to have a major impact, because the foreigners don't hold massive amounts in bills and bonds. So in terms of the rate view, what we feel is that rates will remain quite modest. But what we also need to identify is that the first half of next year, there is quite a bit of borrowing requirements that are there, and the fiscal outlook of the government is also need to be taken into consideration when you give an overall view. But broadly, rates will remain quite modest. Inflation outlook for Sri Lanka is quite positive. We don't think inflation will pick up to even 5% until the second half of next year. So all of this actually, is quite positive on the rate front.
Thanks, Bimanee. Dhananath, coming back to you, looking at the fiscal side of things, can you give us some color on how the government can balance some of these things? Because there are these targets under the IMF program. Then the government has been looking at possibilities of reducing the tax burden on individuals. Plus, also, I think from a government's perspective, they have not invested in infrastructure for a while now, given the economic crisis. Plus, we heard recently that they are increasing social spending. So could you talk to us about that?
So absolutely. So under the IMF program, there are certain targets that we have to meet over a period of time, primary balance, and also even our spending on the social safety net. There's a threshold marked by the IMF, and at the same time, very importantly, the revenue as a percentage of GDP. So I think government's mandate and their promises, they are evaluating. We will only be able to know it after the budget. It's only a vote on account at the moment. However, the president and the finance minister has constantly mentioned that there will be some revisions on the taxes, so on and so forth. So what I feel is, most likely, rather than taking different line items from the VAT list, or like exempting certain items, it is better that to give it on the other end, like a cash transfer for people who are using school books or stationery. You give it rather than removing or exempting items from the VAT, because then you're making the system complicated and you're opening room for leakages. On the corporate tax, I think it's at 30%. I don't see any room to increase it further. Even on the pay tax or APIT, I think again the threshold is at 36%. I think the suggestion was to slowly bring it down to an extent. If we do it, we have to cover that revenue up from somewhere. So most likely the government, it seems, because the government so far with the news, they have somewhat disagreeing with the imputed rental income conversation. So then where are we going to tax? So I think probably they have to consider it from the border, which I do not recommend. Maybe items like the vehicle imports, so on and so forth, they will consider. I do not recommend that route. Because when you tax at the border, again, it makes our markets uncompetitive. So the option is to increase the tax net over a period of time. So let's see, now the tax filing date has, I think, by the time we record this session, it has extended. So hopefully, depending on how, I think this time I feel it could have been much better, because I think I felt there was a interest even on social media. This has been discussed. So improving the tax net is the only solution if we are not going to increase the tax rates. So one option is government may look at uh, the border taxes, especially on vehicles. But again, we have to keep in mind, if we are opening up for vehicles, I recommend it to do it phased out on one side, and also the interest rates has to adjust according to the dimensions. Then, if you open it, because when you open the market for imports, of course, a lot of the private credit will direct towards the vehicle imports. So when the private credit moves towards vehicle imports, the government cannot keep the interest rate artificially low by supplying money to the market. In that sense, automatically, wherever the other credit lines will dry down to service the vehicle import, so automatically the market will be adjusted without a currency depreciation or with a minimum impact. So that's what I recommend. But the option is to increase the tax rates. I do not see any other like categories to tax. Maybe you can bring down the VAT threshold and get more companies to pay VAT, which is also I recommend, because ultimately value added tax is a less distortionary tax. Because if you impose a specific tax for something, then I think it causes problems. I think the other sectors are pretty much covered, unless I think there was a conversation at one point on a turnover tax, which I highly discourage, because there are companies who only runs on like very thin margins, and if you have a turnover tax, it can affect very badly. And also, do not recommend, I think, rather than recommending which sides to tax, the recommendation could be what should not do, because we have bad experiences. There are like one-off taxes on certain selected areas, which is not recommended. The one thing that they can do is also improving the digitization front. If you recall, there was a conversation that everyone has to have a TIN number when they are registering a vehicle, when they are taking a revenue licenses, getting a construction permit. I think that can be accelerated, so automatically the tax revenue, I think, can be expanded as a percentage of GDP.
Thanks, Dhananath. So, staying on the fiscal side, just one follow-up question on the SOE reforms. The previous government was looking at more of a privatization model, but the current government seems to be taking a different approach. Could you talk to us of an alternative which could work in the absence of privatization happening?
Yes. So one option the government could do is, even in the IMF governance diagnostic report, it was clearly mentioned. I think even IMF wasn't pretty much going in the direction of privatization. They are recommending a state-owned enterprises holding company. So approach is, you bring, because now most of these corporations and like business interest organizations are under each ministry. So then the power comes to the minister to appoint the board of directors and the CEOs for these companies, which is of course very biased, because there's no competitive bidding, competitive process, where depending on whether you support your political party, whether you finance their campaign, you appoint people. And of course, when you support it became a vicious cycle where you support the political party to get the appointment to earn that money back that you have spent on the party. So what they have recommended is get it under one holding company. So then all the appointments will be done under that holding company. So you bring at least one layer that the ministerial discretionary power will be diluted. That's, I think, a reasonable model. But in my view, there are some sectors or some organizations that we have to let go. But if the government stance is to basically keep it, I think that option is possible. So then we are discussing about bringing governance. So Temasek model or something similar to Temasek model, or like one big holding company and all the state-owned enterprises coming under that, is one option. Also, we need to understand, for certain businesses are difficult businesses. Now, let's take the airline business. We all know it, even in the private sector, the airline business is a very technical, very competitive, very difficult business, even for the private sector. And most of the airlines are also making losses. But when the government starts doing it, for us to, I'm sure there are multiple conversations. If you don't bring that investment, you really cannot run that airline because this is a hospitality industry one. Your aircrafts has to be refurbished, or you have to increase or either you have to lease new aircrafts or you have to buy new aircrafts. So this requires a massive investment. And of course, the president or the finance minister will have a choice whether I'm going to invest my money on buying new aircrafts or leasing out new aircrafts, or am I going to increase my social safety net, because already about more than 20% of our population is below the poverty line. So that between those two choices would be a difficult one to manage the state-owned enterprises. But if the government stance is not to privatize, that's fine. Then we are looking at more governance and the holding company option by appointing capable people and bringing that governance. But again, there will be some conflicts. For example, certain industries, the regulator is also the government, and government is also the player in the game. So in that sense, there can be a unlevel playing field, but that is, I think, a secondary matter. The first step, you can bring everything under a holding company in the absence of certain privatizations. And again, I'm not recommending everything to privatize. There can be public-private partnerships. One category, there can be a holding company. There are multiple options in the absence of a privatization approach.
Thanks, Dhananath. Bimanee, if I can bring you in again, you mentioned low interest rates, inflation remaining very much under control, the economy is recovering, primary balance is now at a surplus. Isn't this like the ideal time to invest in the market? I think recently the CSE has reached an all-time high. So can you talk us through the investment process here?
So essentially looking at the stock market, so it's hit like a all-time high, breaking the previous records. So all the macro indicators right now suggest positivity for the continuous bull run. So obviously the rating upgrade which is going to come, and basically Sri Lanka becoming a investment destination back again after we come out of the default status is all quite positive. But also what we need to understand is market is always a forward-looking indicator, and market is essentially running up for this optimism and positivity. So market performance and earnings growth are essentially two different things. Or basically market performance and earnings also needs to be like borne in mind quite closely. So what we saw recently is market reacting or re-rating for the macro positivity, plus there was some amount of political uncertainty that was surfacing. So all of that getting addressed, we see a market really re-rating. Right from here on, what we see is the market growth will be greatly dependent on the earnings growth of companies and how the sectors are going to perform in the future. So obviously next cycle of the market we feel that will be based on the how the sectors of the economy are going to do from here on for the next couple of years.
Okay. Thanks, Bimanee. So, Dhananath, another question on the macro front. I think we spoke about this the last time you were here as well. The Economic Transformation Act, it was brought in during the previous government. I think the current government is tasked with implementing it. Do you think this will help in really driving sustainable growth into the future?
That's a tricky one because on that economic transformation bill, Oshadha, there were certain parts like I think the previous government was trying to mandate some of the targets to bring it to like make it a law, the primary balance, so on and so forth. I think there are a few important aspects, mainly when it comes to investment, which I think this government should consider to keep it and move forward, especially because on the investment climate, we spoke about Bimanee spoke about the correct macroeconomic conditions for investments. So if we were to attract investments, this land problem is a major issue. So economic transformation bill provides somewhat regulatory solution to that, where there will be a separate zones Sri Lanka option, where it will come under separate entity, and even the private sectors, public-private partnerships, there can be industrial zones where the investors can come and invest. Because if the government is looking at bringing more investors, that's one key component. Also, the other component is on Invest Sri Lanka, which is, I think, a retransformation or formation of BOI in a way. And how I see it is pretty much unbundling the BOI for about 2 or 3 categories. That is again not a bad idea if we were to really push the investments and sell the investment opportunities in Sri Lanka. And there are other 2 think tanks and things like that which may use scrap it if you are really, strict for funding. And there was another trade negotiating office, which is also important because now with the geopolitical tensions that we see, especially if starting in January, with the president-elect Trump coming into power, if he continues what he's announcing at the moment, this tariff structures, if then the 2.0 of Trump administration, a lot of companies has to move for that China plus one option by diversifying their supply chains. So in that front, we should be prepared to get those opportunities. At the moment, we are not even at the radar because land is a issue. Multiple surveys has been done. A lot of companies are saying land is a issue, investment is a problem. So we have to, because taking an investment license, and if you were to invest, you have to take about, depending on the category of investment, you have to take about 15, 16 licenses. So I saw with the recent conversation with the president and I think the BOI, I think there are few new industrial zones are coming. I think it's at near completion or something in that sort. So I think that's important, but it won't merely solve the problem without clearing that regulatory framework. So ideally, we should have a plug and play model where the investor comes, most of those licenses have been taken, he only has to take the basic ones, the company registration, so on and so forth. So we have to be prepared because while there can be a disadvantage with if Trump increases tariff, of course we know our exports will be impacted and the global consumption will come down. But at the same time, we can make it an opportunity with the China plus one approach to attract investments. So I think we have to be prepared if we are serious about it. And I think economic transformation bill, they can slightly tweak it if they really want. But I do not recommend to scrap that zone Sri Lanka and to keep the gist of it or like the core of it, which is I think very, very important for us. One other act that I also don't want to recommend, I mean, I won't recommend to tweak is the Central Bank Independence Act, because that one thing is we will that will completely derail our IMF program. On the other side, especially if we are allowed considering importation of vehicles and so on and so forth, it is important that we keep the macro stability and the monetary stability in the system. Otherwise, everything will be again going, we will go south.
Thanks, Dhananath. So next question, open to both of you. Bimanee, maybe you can start. What are some of the key risks you see to Sri Lanka's recovery in the years ahead? I guess the internal kind of risks are now quite limited, but what are the external risks?
So on the external side, if I may comment, like Dhananath also briefly touched President Trump's trade policy, I think that's going to sort of globally impact everyone. So we got to wait over there. So that's one of the key things that we could see. And we also see credit growth in India slowing down. So obviously last year it was growing at about a rate of 20%. That's like sort of half this year. So that is also like because we were also looking at piggybacking the Indian growth story. So that seems to be, I mean, it's still strong, but relatively, getting sort of flattened out. And the European consumer also seems to be a little slow. So that consumption side also seems to be a bit of a concern globally if in case we see. And obviously the geopolitical tension, we are right now, there are 2 wars, Israel-Palestine war and the Russia-UK war. So then basically how these will sort of play out is something that we've got to look out for. And also one of the things that maybe we don't really pay much attention is on the weather side, right? So last year we had blessings in terms of the weather, good rainfall, so hydropower generation was quite good. But let's say if that reverses, what is going to impact, how it's going to impact Sri Lanka, particularly given the fact that we are a net importer, right? Particularly we'll have to import more of oil. So that is also another impact that we sort of don't really pay too much attention, but that could be another black swan event, right? So that's another thing that I would maybe list down. And particularly on the policy front, again, what we will also need to see is the government seems to continue on the IMF program, and that is more of an internal thing. But in case the government also tries to sort of slightly deviate or come out with alternative strategies, that might also be another risk. But of course, we feel that risk is much lesser. But of course, having said that, in terms of domestic policy front, that might be another thing to watch out for.
Thanks, Bimanee. Dhananath, anything you would like to add?
No, I think what Bimanee added was quite right. On the weather front, I think we have been lucky, but we saw some recent floods. Hope there will be no bad weather events, because that can completely affect our entire production and GDP, so on and so forth. But I think the government also have given a clear indication that they are continuing with the IMF program. Not that IMF has any magic solution, but it is important for stability till we at least get into the growth path. And also the debt restructuring coming to an end is important. In terms of risk factors, again, there can be this geopolitical tension. We have to be very, very careful, especially with the Trump administration and how the rest of the world is going to react to it, because we do not want to be a geopolitical football and get that trade impact afterwards. The second thing is, I think another opportunity there is also on the maritime earnings that we can do. But also we have to remember maritime earnings, or to make it a maritime hub, you cannot just focus on ships, because maritime happens also with production and services. Just because the ships pass by doesn't mean that we become a maritime hub. We have to have the production services. And again, that's where the land and the labor and the capital markets regulations has to be reconsidered if we are really open for attracting them. Other risks are mainly the domestic risk. I think we should not, especially with tourism, as those are all very sensitive industries for global events and also as local events. Those are the things that I'm worried about. But otherwise, I think if we continue, if we don't, I mean, we can evaluate actually the risk factors with the number of reforms that we reverse. If we do not reverse and bring more and more, I think to bring it to the same direction, uh, I think there's some hope. And then we have to make sure that the interest rates are coming down, and then on the servicing of debt from 2028 would be the next challenge. Anyway, we are start servicing with the debt restructuring coming to an end from January onwards, like from next year onwards. So those are the key factors that I see in moving forward.
Thanks, Dhananath. So, Bimanee, anything you see as internal risks coming in?
Yeah, so given the strong mandate and of the government essentially was alluding for tax rate revisions, then salary increase for the government servants. So those are some of the sort of run up to the election, some of the promises that were made. So we feel given the strong mandate, there might be some amount of easing that might also have to happen. So how we manage these easing policies along with being in the IMF program to maintain these type of strong macro trajectory is something I think we will have to balance it out. Also, particularly for foreign investors with the rating upgrade that's going to come through, which we are looking forward looking, that is something that the government will have to be very consistent in the policy statements that they make, so that because the current government does not have a reference point for foreigners, I think they have to sort of give positive direction for foreigners to guide through Sri Lanka as a better investment destination.
What would you say is your kind of wish list for the budget 2025?
So wish list is mainly things, a lot of things not to do, rather than doing it. I think definitely can consider improving the social safety net expenditure. That's number one, because I think we are below even the IMF threshold. So we can spend some money and clear those iron out, because I did some focus group discussions. There are still a lot of concerns for people who are really in need, because that process is, there are a lot of, I mean, there are some areas that we can improve, but I think it's a better system than it was. That's number one. Number two is do not move away from the pricing formulas, especially on petrol and in the energy sector, because there is no way in this world where you can sell something below your cost of production. There's no way. You can do it, then someone has to pump money from somewhere else. So do not, because that's the starting point to completely derail on a lot of fiscal targets, and it can come to monetary instability as well. So don't do that. And also bring the growth reforms. I think the labor reforms is quite important. This government has a track record with close relationship with the trade unions. I think this is a good opportunity to bring a unified labor code, because if you are serious about attracting investors, this labor market problem we have to solve, because even an investor comes, if we cannot recruit people, it's not going to work. So in the budget, I think we can focus. And at the same time, on the land issue, I think there's a good chapter even at the NPP manifesto on providing on land digitization and providing the land rights. I think that is an area that the government can accelerate because that will open a lot of doors. But I think the approach on the digitization front and providing the land rights and spending on social safety net, I will keep it on those three key pillars and not to reverse the Central Bank Act and the full pricing formula, so on and so forth, and do not do too many surprises. But you can try more options moving on. But the anti-corruption drive needs to continue because that has been the main mandate, because that will also give a signal. But it won't just happen just by trying to put people behind the bars. It is a more reform agenda that is required on anti-money laundering, and also even having an alert system to the banks when there are suspicious transactions. So those are the things that the government needs to focus, and also in the coming budget, because this budget is more rather a budget. It also indicates the policy direction that this government is going to take, and opportunity to give a good message to the investors, and I hope that will be capitalized well.
Thanks, Dhananath. Bimanee, any thoughts you would like to add?
Yes, so essentially, I feel that the first tick, essentially, like what Dhananath said, because this is the current government's first budget, which all the markets will be looked at. So we hope, as market participants, as asset manager, markets will be really focused on the budget being essentially being in line with the IMF program. So that's probably the main thing that the markets will look out for. The second thing, actually, as a investor, we would like to see a budget that is getting presented with a at least 3 to 5 year view, right? So we've always seen budgets, proposals coming through, getting reversed, tax rates getting increased, thresholds getting reversed. So if in case the government now they have a fresh mandate to come out with a budget with at least a 3 to 5 year view, so that the markets are prepared in terms of the broad framework and the policy direction, that I think is like that will be like a huge positive for the markets if that directional impact is being given. The third thing is basically, again, Dhananath spoke about this. There is basically we've taxed the corporate side, the individuals are taxed. So obviously, given the mandate, there is some amount of easing also expected from the government. So broadly, what we would, as again, markets would expect is markets would really want to see the leakages getting prevented and the burden essentially getting shared without essentially looking at certain sectors and sort of increasing taxes. Markets would like more broad base in the tax net, or at least directional way as to how they are practically going to increase the tax base, prevent leakages to sort of get the revenue targets to where we want. So because in terms of the tax rates and tax, the thresholds, I think we've sort of hit those limits where uh, the safety nets are, we have to look after those things. And the last thing maybe I would want to add is capital expenditure side. That's something that's got curtailed because of the economic crisis. So some amount of forward-looking capital allocations, which are meaningfully actually allocated to sort of get to the potential GDP growth, is something that we would want to see in the upcoming budget.
Thanks, Bimanee, and thanks, Dhananath,
Thank you.
for agreeing to come and share your valuable insights with us today. And thank you everyone for tuning in with CA Connect.